This is Short Hammer. It is the 13th of August, 2022. And this is Trading Zones. We had an interesting week. Quite a bit of data came out, and that data did impact the overall market sentiment. So, um, it's funny how week to week sentiment can change in the market. Even day to day sentiment can change in the market. But let's just get into sort of what we see here on the charts, and then I'll get into a few thoughts after that. Right. So looking at the RTY, which is small caps financials, right? So your Goldman Sachs and those types of financials, and also credit unions. It's a lot of different financial institutions that are in this. But okay, cool. So we are up against the 2017, right? And if we're looking at this, just looking back, this is back here to January, right? The beginning of the year. What we see is we saw some extensions down to 1925. And even though we went lower, you can see that here. If we say 1925 is roughly roughly the bottom here, right, of this little area here in January, February into March. And then we could say the top of it is around 2021, right? We saw how we bounced around. You can see some of these tops in that phase, right? Look from January, February to March, right? Beginning of the year. And we saw that we did see some extensions up to 2060, 2060, then 2081, right? So if I'm looking at this, what this is telling me is two things. Watch to see what happens around the 2019s, right? That's one. Two, if we clear the 2019s, we may have room up to the 2060s. And if we could push through the 2060s, watch for the 2080s, right? So that's the potential. What's the other thing that could potentially happen here? We could get a pullback down to around 1925. That's also possible, right? And so what I'll be watching for is if we see any reaction around these 2019s, 2019s into the into the 2020s, but around these 2019s into 2020s, any reaction and we pull back, then keep an eye open for a backtest to 2009, then a backtest into 1991, then backtest to 1962. That's possible. So that's what I'll be watching on the RTY. I'll get into thoughts in a minute. Let me keep going. Let's just run through this, then we'll talk. The MES looking good here. If we look back, we see here from 4140. That's an area that was tested a few times. And then the extension goes right up here into about 4290-ish. Into 4301. We see some tops here. If we look back, April and into May. So late April into early May. This is an interesting area. Want to see if we can get above this. If we get above the 4305, 4310-ish area, that may give us a little bit more room. And from there, I see 4350, but it feels like we can maybe get 4380s, maybe even into 44s. That's possible, right? But what's also possible is we could retrace to the bottom of this that's down here around 4140s, and that's possible also. So we have to see if this is going to continue, if we're going to get a retrace to 4140s. But if we were to pull back, watch 4249, then keep an eye on 4201, then 4168, 4153-ish. That's the area. And then we could sort of really drop back down here. But we are above this little zone, the 4150s by the 4070s, and that's a good thing, right? We did get through there. But you saw this area I mentioned to the left, and you saw those levels that I mentioned, the MES. Let's keep it moving. And now this is on a daily chart, by the way. Go M&Q. Open this up. So first reaction into this area, 13,393 by 13,430s. We did see a reaction to the downside there, slight reaction there, but then we saw a pushback through. Now we're up against this next area, 13. What is this here? 563. Let me broaden this out so we can see this clearly. Let's see what we've got here. Okay, 13,563 by 13,580s. Let's see if we can get through that. We'll look back to the left. We're above that area, so it looks like we're open now. Potentially open to the 13,700s. We have to see how this plays out. So yes, we do have some more levels opening up here that we could definitely squeeze higher on the Qs. But this is what I want to say, right, before I sort of get into the tickers. The reason that we're up is that the data was better than expected. Data wasn't good. Data was just better than expected, right? And so what that means is that if we'd had like a reading of 9.1, 9.3 on inflation, then the market may have pulled back a bit. But instead, we had an inflation number in the 8s. What's that mean? If you went back, let's say a couple of years, and you told anyone on Wall Street that inflation would be over 8%, they would blow a gasket, and they would probably think we're in a recession, right? But because what just happened was inflation was slightly lower than expected. Inflation is still insanely high, right? And the Fed wants to get inflation way back down, right? Probably around 2-3%, right? So when people are saying, being that some people have been saying inflation has peaked, and because inflation has peaked, that the Fed should ease off interest rate hikes, right? And if you think about it from a trader standpoint, it's logical because it helps us sort of gauge where the market's going to go, and it lessens the potential of surprises, right? But this is the problem with that. If the Fed feels that the reason that inflation has potentially peaked, and the reason that inflation has, eased a little bit is because of their interest rate hikes, why would they stop when the job's not done? So that's what I would consider, right? Narratives are interesting, but why would the Fed stop raising rates if the job of combating and lowering inflation is not done? What they have seen is we've raised interest rates, inflation has sort of pulled back a little bit. So if we're going to think about that sort of logically, what they may be thinking is, let's go ahead and keep raising these interest rates, and it's going to keep lowering inflation, right? And so it's that thing where to a hammer, everything looks like a nail. And so to the Fed, everything looks like what we're doing is working. Let's keep doing this because that's what's causing inflation to go down, right? And so we'll see. So what I would say is, if you're in long positions, lighten those bad boys, make sure that you're hedging, because yes, we're up, and yes, sentiment is slightly shifting, but be careful, right? Because it's been a steep climb, and what you don't want to do is give back the gains that you may have made in the last week or so, or in the last 2 weeks. You don't want to give back those gains. So I would be careful. I would be cautious. I wouldn't start thinking that we're all of a sudden in a bullish market. I would just be careful. all the risks that were out there, whether it be it inflation, whether it be it Ukraine, Russia, supply chains, all those risks, geopolitical risks, all those risks are still there. Just because the data was a little bit better than expected does not make those risks go away. So just be careful and don't get caught up in the euphoria that you see everyone screaming, oh, it's a bull market, it's a bull market, buy, 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 buy. Don't get caught up in that. Because it's been a sharp climb and a slight pullback where we can sort of cut through levels. It wouldn't be a surprise. So all I'm saying is be careful. That's all. Just all I'm saying is be careful. Be careful. Because I have a few positions that I'm a few long positions. I am definitely taking off Monday or Tuesday. For sure. I will be out of those bad fellas Monday or Tuesday, no later than Wednesday. It's just, and you're going to be hedging to make sure, just to protect against the downside, because you never know. So this is Amazon up against the Pop Gold, the yearly pivot, which is the strongest pivot. So we'll see if we're able to push through that into the 145 area. If we look to the left, we saw that we've tested the 136 a few times, and now that we're here, right up into this 136 area, it looks like each time we've touched this 136 area, we've had a minimum climb. 162. We'll see. So, but remember, this is pre-split, right? So we had to kind of take it with a grain of salt. But let's see. Let's see if this area, this 136 opens up these 160s the way that it did back here on the 24th of January and back on the 8th of March. Let's see if we get this rise up into the 160s here off of this setup. We'll see. Just because I think if interest rates continue to go up, it's usually bad for tech. So we'll see how things play out here. But I'll be watching early in the week. See if the market has more legs, get a little bit more of a pop, which I would prefer to get out of a few positions that I'm in. But we'll see, right? But that's what we're watching here. Mentioned that level to the left. Pull back to 136 wouldn't be out of the question. I'll prefer if we didn't, or if we actually just bought up through the 140s. But we'll see how that plays out on Amazon. Pop on over to Netflix, and this is amazing. You look at this buy up right here, right? And so what would we love to see? We'd love to see this close the gap all the way up in here to 330s. Is that going to happen? No idea. Mentioned in the last couple of videos, and you can sort of check those videos if you want to sort of get the thesis on Netflix. I think Netflix has repositioned its business away from acquiring new eyeballs, acquiring new customers, and they've changed into a phase where let's maximize and monetize the customer base we already have. Them trying to pivot to cracking down on account holders and potentially sharing of passwords. That's this is the I think the graduation of a company when you realize that certain things are beneath you. If you switch to the advertising model where advertisers are now being presented in your content, right? And the advertisers are paying you almost like a billboard, right? They're paying you for being included in your content, whether it be toothpaste, cars, however you do your movies, right? Because Netflix spends a lot. Netflix spends a lot on original content. So what I think doesn't matter is you sharing your passwords with someone else. For me as Netflix, I don't care if that user is paying or not paying, as long as that user will count as um hmm like if I'm able to now go to an advertiser and instead of going per user, I'm able to calculate it by hours watched, then the sharing of your password is now monetizable, if that makes sense. I don't know if that's even a proper word, but I can now monetize if you share your password with 4 people and you only watch Netflix for 10 hours within a week, right? You only watch it for 10 hours, you personally. But the people that you're sharing it with are watching it for another 60 hours or 70 hours in that week. I could say, hey, this particular account, they're watching 70 hours of programming from us per week. So that brings us value if we're now going to an advertiser, and we can use that as a way to be able to leverage more advertising dollars, right? And a bigger advertising budget from that advertiser. So I just think it's interesting. It's just how I'm looking at it, right? Marketing is just my limited perspective. I think it's interesting. So I think Netflix is in an interesting spot where what they're doing is actually very, very interesting. And if if their pivot from what they talked about, what they mentioned, if their pivot is what we think it is, it's huge for Netflix. It's incredibly huge for Netflix. Incredibly huge. Um, and how they execute that's very important. The type of person that's able to sort of seamlessly weave that into the content so that there isn't a blatant sort of like if you remember Transformers when they had just Ford marketing everywhere, whether be it billboard signs blowing through, like it's everywhere you looked said Ford. That was overt, but maybe they could do it in a way where no one would recognize it's just part of the content, right? Almost like a subconscious programming, subconscious marketing, right? Just how they place the products throughout the content, throughout the different movies, but or series. So neither here nor there. Um, keep it moving, but let's watch this technically. And so right now we're in a at a level where we're in the gap. Let's see what the buyers do from here. Do we reject and retrace and try to recall and find another move up, or do we sell back down to the 205 area or lower? Let's see. But the next level that we have here is the 264.90, then the 282, 292, 306. Like we have 317 coming up. So definitely a lot of potential here for Netflix, just based on what we're thinking that they're doing. But I don't know which quarter that they're going to roll that out. So no, not sure when we'll start seeing the potential. And that's if I understand it correctly. When they roll out their new advertising, uh, I'll say advertising agreements, how they execute that, I think can be huge, right? So if they execute that well, they'll have to sort of let us know which quarter will we start seeing the potential benefits of the advertising dollars coming in, right? And sort of switching their model of how you value that company. So we'll see. But these are levels that we're watching on Netflix. Being very careful, just overall. And let's move over to NVIDIA. NVIDIA is above that 181 by the 150s. It's like 158-ish area here. And we're pushing back up. So what do we want to see on NVIDIA? We want to see a rise to around 195.80s. That's exactly what we want to see on NVIDIA. We can see those 195.80s. That will be beautiful. But if we look at this area, right? You can look back here to 27th of May to the 9th of June. And what did we see? We saw a little bit of turbulence as we bounced between the 181, 182-ish area up to around the 191-ish area. We're kind of stuck in that little box. If we go back, we look at the 27th of April to the 6th of May, we're in a box there also, right? Roughly, just look at the bottoms here, 185 by these tops here, 197-ish. So that was also interesting. So where we're going here right now on NVIDIA may open up a little bit more room to the upside, at least about 5 or 6 points. We'll have to see how that plays out, and maybe a little bit higher. So we'll see. The levels that we have marked are 181.90, so 181s. Then the 201 area is the next area that we have marked, and we'll see if we get any movement towards that area. If we pull back inside the 181s, then I'll definitely be looking for a pullback. Probably around this blue pivot here, 168-ish pop blue. So we'll see how this plays out on NVIDIA. Microsoft, look at this strength, looks beautiful. We look to the left here, look at what we're seeing through April, 11th of April to early May. It looks as if this area here, right around this 290-ish, 292, 291-ish area, did provide a little bit of turbulence. Maybe we'll see a pullback to 278. If we don't see a pullback within here, we can look for a rise to 295. And if we crest that, maybe up into the yearly around 299, or maybe up into this area here around 302. We see a little bit of candle structure here, multi-day, back on the 3rd of February, 4th of February, 5th, it's like 7th, and potentially the 8th. It's 299, so that's interesting. So we have to wait to see. But remember what we mentioned about Microsoft post earnings is that you kind of have to dig into the Microsoft earnings report, because they usually will have a slight pullback after earnings, but then their investors begin to really pick it up and buy into the stock, and it gets a pop. And it looks like whatever was in the earnings report and whatever their guidance was positive, and it was enough for the investors in Microsoft to buy. And so watch these levels that we just mentioned. If we could get a pullback to 290, then a pullback lower to 289, 288, then potentially 286.50s. But I think the buyers, I believe, are excited right now. So a push into the 295 and maybe even almost the 300 level would not be shocking with the level of buying that that we're seeing right now, right? So we have to see if people are still motivated and excited headed into next week. But those are levels to watch on Microsoft. Let's keep it moving. Head on over to Meta. So Meta in an interesting spot. Let's pull this up. Boom. So I believe we were shorting the 170s before, but now we're through that. And this gives rise potentially to the $2 mark. And you can see how, someone could look at this and say, hey, that's possible, right? We just need to get through the 185s. And then that does open up the 198-ish area on Meta. And as we mentioned in Meta, we do believe that they're pivoting to the metaverse. We have to see how they execute that. That's in past videos, not going to repeat it here. But being a curator can be valuable, especially if you're dealing with big brands. And so being able to gain the what's the word? Not the notoriety, not the acceptance. I would say the positioning to be seen as a curator for big brands into the metaverse can be interesting. And we'll see how Meta may or may not execute on that. But next level is right here, the 184s. See if we can get through that. Then next up is the 190s, 198s, and then we get up here around the 200s. So definitely want to see how that plays out. Do like that each time we pull back, what's this, around the 154.90s, There's some buying there. And then we were seeing selling in the 170s. Now that we're through that, this could definitely open up more room. Remember those levels that I mentioned? And watch those head into next week. Please be careful. Please lighten your positions if you can, just because not being sure if we're going to continue up. If you like in those positions, it will lower the risk, and just play with your stops, right? Just be careful. Market is definitely, I won't say overheated, but it is definitely, there's been a slight shift in sentiment, and it's noticeable, definitely noticeable. Let's keep going. Over to Apple. Apple has been very strong, pushing through the 170 area, up around 172.10. See the pop blue here. If you're looking at Apple, based on where Apple is now, it looks like the next area to watch is all the way up here in the 176s, right? We'll see how that plays out on Apple. Yeah, like the 176, maybe even the 180s, right? Let's see what buyers are doing with Apple. Remember, Apple's in a lot of hedge funds. A lot of people, have Apple at their retirement. So I mean, it's in everyone's best interest that Apple goes up. And so we'll see if this squeeze continues, or if we get a slight correction. This is a sharp climb. So we'll have to see if there's, continuation headed into next week. But definitely watch to see if we stay over the 170 hole. If we get over the 172s, then we want to watch 176s just to see if we see strength to those levels. But just be careful. I think there's definitely a potential for pullback, and that it might be nasty. So if you're up significantly, don't hesitate to take profits, and lock those bad fellas in. Keep it moving. Tesla is the gift that keeps giving. So we're looking at Tesla. It held the 850s on all these tests, right? We did sell through here on the 9th of August, and we did go lower, and they bought it back up. Now to the upside, what should we be watching? We should definitely be watching the 930s, 937-ish area on Tesla to see if we can get there. And if we get there, do we get a breakthrough? If we get a breakthrough there, then that does open up the 969s and the 994s that may be higher on maybe higher. So we have to just keep an eye on this. If we pull back, watch for a break at the 850s. If the 850s do clear, then the next area we watch will be the 819s. We'll see how that plays out on Tesla. That's the levels that we're watching currently. Let's see. Okay, headed over to Target. If you remember on Target, I believe we mentioned that we were seeing well, the main thing is this, right? We see slight acceptance here, where when we pushed up into the 166-ish, 165-ish area before, there was a sell, right? Just a rejection to accept it. This time we're definitely seeing a little bit more acceptance and a little bit more continuation. So let's see what we can do here. We're in the gap. Definitely like Target. Let's see if we can get through the 175s. I would love a gap up on Target. Earnings is right around the corner. It's one of the plays that I'm actually in, and I like it a lot. Let's see if we get some movement to the upside. If we clear the 172.19-ish area, the next area up is the 177.20s. Once we get through the 175.80s, there just looks like maybe pivot right here. So I have to be careful here, but we'll see. We'll see how this looks into next week. But definitely watching this. If we pull back below the 163.99-ish area, then we may have a loss of this upward push, this upward sentiment. But as long as we're holding this area or holding the 160s, definitely a strong position for a push. We'll see. We'll have to wait and see. Okay. CI. Remember we mentioned CI and still going to the upside. 300 is possible. It's new 52-week high. And a lot of times you may see a pullback within a channel whenever something is that overextended. But I think the new bill that's coming out is going to address Medicare being able to negotiate overall pricing for drugs. And so I think what's going to be interesting is, does that impact pharmaceutical companies, but not impact a company like CI? So that's going to be interesting because when you say the healthcare, you kind of have to differentiate between sort of what those companies do and how a bill that's focused on the pricing of the pricing of pharmaceuticals, if that would affect a private insurance company. That's something to consider. But oopsie, didn't mean to do that. Slide this back over. But we see that there's strength on 271s. Nice little gap up here, 277. And we're just squeezing. But those levels that we're seeing on CI, I would love to see a tap of the 300. Pretty sure the bubbles will be, yeah. I won't say bubbles, but that's what I think about when I think about the pullbacks. Pretty sure we'll see some pullbacks by then, but we'll see. I do think 3 is possible. It'd be good if we get a nice gap on Monday in a squeeze. But we'll see how it shakes out. Let me take a peek over at Goldman Sachs. This is an interesting level right up against this bar lines and a pivot. I want to see if Goldman Sachs is able to get through this 356 area. If not, I may be trying to fade this back down to the 347-ish area. We'll see how this plays out. That's okay. Yeah, it's an interesting level. We'll see how Goldman Sachs shakes out. If you enjoyed this video, please don't hesitate to go to our YouTube channel and subscribe. And you can look forward to receiving not just videos from me, and not just videos about sort of weekly watch lists and things like that, sort of what we're keeping an eye on, but also chart patterns and setups. Going to be putting some more of those types of things out, and maybe a few other things. But also, you can look forward to receiving content from Elisa as she shows you how she utilizes her power of pivot strategy to find great pre-market, intraday, and post-market trades and setups. Thank you so much for your time. Have a wonderful week of trading. And remember, you're only one trade away.